Thank you. We may open it to questions then. First question, Ross.
Alan, just can you tell us, has there been any discussion with the board about your own position as Chief Executive of Qantas, and also in regards to the loss that the shareholders clearly are going to have to bear in some way, shape or form? Does that have any impact on your ongoing commitment and or contract with Qantas?
I'm absolutely committed to Qantas. Going forward, we believe that obviously the circumstances that Qantas faces today are very difficult. We have the capacity situation internationally and domestically that's adding to significant losses to our international business in particular. But we have a plan to fix that problem, a plan that covers every aspect of the changes that we need to make in the business to get it back to profitability. And we have the courage and commitment as a management team to make that happen. And we have the board, the management, fully behind the plan going forward and fully committed to turning this business around. Yes, next question. Sorry, I've got a few lights in my, maybe that gentleman there in the corner.
Hi there, Alan. I think we were hoping that the international result would be one of the better results after what you did with Emirates last year, but it's a pretty heavy loss. I was wondering if you could help explain a little bit more about why that's not meeting some of what people expected from that.
Yeah, I'll start with it, and I might ask Gareth to contribute to this. There's a couple of factors that are there. There's been a 9% growth in capacity coming in and out of Australia, particularly capacity added to Southeast Asia and to the European markets, which have resulted in a significant yield decrease of over 4% on our international business. We've also, because of record high fuel prices, the longer the sectors, which is the case in international, the bigger the impact that we've had from fuel, and we've had a significant rise in costs on the fuel side. I have to say, though, as I mentioned in the speech, the Emirates Alliance is getting a great reaction. It's made a big difference to our European operations, but the overwhelming capacity growth and the impact of fuel has meant that that business performance has gone slightly south. Has gone south. Gareth, do you want to mention?
Yeah, I think you've covered most of it there. I think the other point we'd make is that the unit cost performance in international was down by 4%, so we continue to take the cost down, but not at a rate fast enough to offset the yield decline, which is being exacerbated or driven by the significant levels of capacity growth that are being poured into Australia by overseas carriers.
Yeah, over here.
Hi, Alan. I just have two questions. The first is just on the international business. Do you still have a target of returning it to profitability by the end of the 2015 financial year? And just secondly, why would you want to raise domestic capacity by 3 to 4% in the second half, given that there's already an oversupply of capacity in the domestic market?
I'll go for the first one. We've always said in relation to the international business that it could be subject to tailwinds or headwinds that could impact on our ability to deliver that profitability target. And unfortunately, the exchange rate, the high fuel price, the changes in capacity that's been added by our competitors have, as I said, impacted that business quite significantly, and the business will not be producing a profit that as we had originally planned. We are, though, when we look at the changes that we have in our plan, taking significant costs out of all of our business, but particularly international, and the changes that we announced here today of the retirement of the older 747s, and the use of the A330s on those international Asian markets, the increase in utilisation that we'll get out of the A380 fleet will all help improve the international business performance going forward. And we're confident that we'll see, with this plan, a significant improvement in its performance. In terms of the domestic market, we are very clearly protecting our position in the domestic market. We, as I mentioned in the speech, have the only profitable carriers operating in the domestic operation today. We haven't added as much capacity as our competitors have over the last few years. They're absolutely employing the position of adding capacity, even though they are losing a significant amount of money and their strategy is loss-making. But the reason why Qantas is successful domestically is that it has a frequency and network advantage, it has a product advantage, it has a service advantage. It is a carrier that has typically outperformed the competition now for over a decade because it's maintained those advantages. It would be amiss of us to weaken that product in any way, and we are committed to making sure that it has the best product for the business market. Similarly, on the leisure end of the market, the reason why Jetstar is outperforming its competitors is because it's got the scale advantage, it's got the recognition advantage, and as a consequence, it has a cost-based advantage and a revenue premium over its competitions. Again, we would be amiss if we did manage and keep those advantages going forward. So our domestic strategy has always been very clear. Sometimes people simplify it. It is more complicated than some of the simple commentary that's been out there. And it's because of that strategy that we still maintain profitability domestically and significantly outperform our competitors. Yes? Steve? Oh, we got one here.
Mr. Joyce, two questions. First of all, do you think today's announcements and cuts and changes to the strategy is going to be enough to get the government to give you assistance in either the form of changing the Sales Act or a debt guarantee? And secondly, could you explain to the 5,000 workers or more who are about to lose their jobs why you've chosen Sydney's most expensive hotel, the West End, in which to hold this event and not at your brand new Mascot campus, which would accommodate this?
So let me cover the first part. We're continuing in dialogue with the government. We said, and again I said in the speech here to be absolutely clear, that the plan we have is the plan that's needed in order to turn around the business, irrespective of the government involvement or what the government decides to do. This plan is needed in order to address the unacceptable performance of our airline businesses. This plan is needed in order to make sure that we have a capital requirement going forward that doesn't exceed the operating cash flows of the business. So this plan is needed irrespective of what happens with government. The dialogue with government has been well communicated, has been well broadcast. That will continue, and we continue with them today. In terms of where we do these press conferences, we've typically done these press conferences here in the city. It is easier for, you see the amount of interest that we have here, and accommodating this level of press, this level of interest, and accommodating the analysts and the shareholders that want to speak to us and the level of interest we have. This is the best facility to do that. Next question. Steve?
Oh, hi, Alan. You talked in your speech about modernising work practices. What are you looking at in that extent, and what sort of reception do you expect from the unions to that and to the job losses? And also, in terms of the domestic capacity, have you got any projections for when you see this domestic capacity sort of demand sort of equaling out?
Yeah, I suppose the first thing, there are changes. We have been over the last 4 or 5 years, for a long time, Steve, as you know, changing the way we do a lot of things in the business. As you can see from this announcement today, we are renewing the fleet at a rapid rate. The fleet age is the youngest it's been since privatisation, under 8 years of age. That significant change in technology means that work practices have to change. The way we've been doing maintenance, the way we've been doing a lot of activity around the aircraft is changing. We previously announced the closure of our heavy maintenance facilities in Tullamarine, which closed last year, and Avalon that will close at the end of this month. Because of those changes, aircraft need less maintenance. When they need less maintenance, you need less people to do that maintenance. You do the maintenance in very different ways. They are the changes to work practices that we're implementing. We've also been using new technology in check-in, new technology in way we do head office and background support for our people, and they mean changes in jobs, changes in support, changes in how we manage the business. So it is very much across the board. I think, you know, certainly with our employees, there is recognition out there that the company has significant issues, that the company is underperforming, and that their changes are needed. and that we do need to adapt to the current environment, which is a challenge for us as a business. And I've no doubt that that message is getting through. And we are meeting the unions tomorrow, as I mentioned, to talk through the details of what this plan is, to talk through what we're trying to achieve, and to get the union reaction to where we stand. Yep. Mark?
Mr. Joyce, $2 billion in savings, 5,000 jobs to go, 50 planes retired. How will customers, do you think, notice the differences with this new leaner Qantas?
What we are still doing here, Mark, is investing in the customer. As I mentioned, the investment in new aircraft still continues. We are going to be retiring the older aircraft in the fleet, the old 747s, the 767s, the 734s. So customers will see newer aircraft operating across the Qantas domestic and international network. We're investing in product, the live flat beds on the A330s, which is in product enhancement for the East-West operations and the Asian operations. That continues, and that investment continues. We're opening new lounges in LA and in Hong Kong. Now, the reason why we're doing that is the customer is extremely important to us. We have a cost problem that we have to address, but we can't have a revenue problem. We need to continue to invest in getting customer satisfaction improving, making sure that customers stay with Qantas and attracting customers back. And what we do on product, what we do on network, what we do with our partners is all key to that, and that's also part of this plan going forward. Yes. Over here.
Hi, Alan. You talked about the international aspect and the problems being partly due to the increase in capacity. That's not going to change. So therefore, even if you continue to reduce costs, aren't you going to continue to face the same problem? You also talked about the fact that the Emirates deal had a very good impact on your European business. Can you talk about, though, what it's meant to your Asian business and the loss of passenger numbers there, particularly flying into places like Singapore?
Look, I think we absolutely recognise the reality of competition in this industry, and so we recognise that is something that's not going to abate. We have to be able to control what we can control as an organisation, and one thing we clearly can control is our fleet and our cost base and our partnerships, and the strategy for international is all about those three. So we have to get our costs down to become more competitive, and we've got a wide-ranging cost program. The $2 billion covers the whole organisation, and a significant proportion of that will manifest itself in the international business. We've also been on a journey simplifying our fleet, reducing the fleet age, and fleet simplification. A smaller number of aircraft types in a smaller number of configurations drives a significant amount of simplification and cost reduction into the business, and it's taken a long time for us to get there because of aircraft delays along the way, and we're getting there. We're almost there. The refleeting of the business is nearly complete, and that will help drive efficiencies and reduce costs. And then we have to make sure we have the right partners in the right markets. Emirates is clearly the right partner for us to Europe. The customers are telling us that, and the economics is telling us that. And it has enabled us to restructure our Asian network to focus more on point-to-point and focus on retiming those flights to when customers want to fly to Asia. Now, we always said at the time we did that was going to take some time to grow into, and that is happening. It is taking some time to grow into. We always expected that, but we are very, very confident that as we move forward, we're going to see that new reshaped Asian network drive benefits for us, and along with the cost reductions that we're focused on.